Zeroing back in on the October CPI report, the index for new cars came in flat for the month, a decline from the 0.2% increase in September. That might be good news for potential buyers. Meanwhile, the used car index increased 2.7% from the prior month, a big jump, higher from September's print. Here to react, we've got Jessica Caldwell, head of insights over at Edmunds. Jessica, good to have you back on the program here with us, and thanks for taking some time. I just want to get your read in on these figures and what you're seeing from the new and then alternatively the used car market.
Yeah, I mean, I think the interesting thing here for a lot of shoppers is that they have been generally pretty shocked when they're going car shopping. The average price of a new vehicle is $47,000. It's not what they remember the last time they bought it. I mean, they're not following prices every month, maybe like we are, or looking at CPI. They just remember they bought a vehicle 6 years ago. It was probably $35,000, $37,000, and now it's a lot more. So where these prices have gone has been quite significant. But what I think is even more significant is that when you think about the actual buyer who's consuming them, it is a big shock because there's a long period of time. It's not like other things like food or gas where you're noticing those prices constantly. Car buying is a lot differently on new and on used as well.
Yeah, and so who is this buyer that is emerging and saying, you know what, I'm willing to spend this much on a used vehicle, and what does it say about the mindset for what people and what buyers are prioritizing right now?
Well, the reality is if you need a car, you're going to have to buy a car, whether that is new, whether that is used, whether that is 20 years old, because you've got to get from point A to point B, most places in this country. And so people are having to allocate more money out of their monthly budgets to buy a vehicle. I mean, we asked people in a survey back in August, are you having to take on extra work, a second job? And 54% of people that are in market said yes, which is a pretty shocking number because you think about transportation as a basic need, but people are having to supplement their income to afford these higher vehicle prices along with higher interest rates, which just compound the monthly payment that you're making. And that's how most Americans look at it. They look at it as a monthly payment.
Based on what we're seeing from this data, what are you anticipating of the holiday season and vehicle sales for the big red bows that might be sitting in the driveway?
Yes, I think that is the image that we think about, a December to remember, stuff like that. The good news, I think, for consumers is that we are seeing on the new vehicle side more incentives. We had that inventory crunch a few years back where there were no semiconductors and microchips in cars, and that really dried up inventory and spiked prices. That has largely been settled. So we are seeing a reintroduction of incentives into the marketplace, and that is definitely welcome for consumers. So I think prices are, they're still high. They're still going to grow. You look at vehicles, they're bigger, more technology, but when you look at the incentives as well, that makes them a bit more friendlier. And we're going to see a lot of deal advertising probably as we go into Black Friday and the end of the year. You'll see a lot of advertisements thinking that now is a great time to buy a vehicle.
Jessica, just lastly while we have you here, and I'm going a little bit off memory, so forgive me, but I believe it was Dan Ives of Wedbush who had published a note right after the election and ultimately had said, hey, if Elon Musk is able to have the ear of the president, that is good for Tesla, but not necessarily all EVs. I wonder from your perspective and how, given that you've been looking across all of the consumer interactions within the vehicle landscape, and if you were to filter down or layer on the EV analysis there, what Elon Musk and the co-founder and CEO currently of Tesla having the ear of President-elect Trump means more broadly for electric vehicles in the mindset of the consumer.
Yeah. I mean, gosh, there's a lot happening there. I think, first of all, President Trump as well as Elon Musk has said that we probably don't need these subsidies, IRA tax credits for electric vehicles. And that has been a major catalyst for electric vehicles this year, especially. We look at the lease penetration rate of EVs, it's 78%. So most people that are buying EVs are leasing them. That's because of the tax credit. So when that goes away, the other brands that have heavily relied on that to move the metal, that's going to be a detriment to them, especially as it's new technology. I mean, it doesn't feel like it, still has its training wheels. People are not necessarily sold, but they see the great deals, and they are right now. EV leases are probably the best in the market. So they see those out there and they think this is good. That goes away. That becomes a much tougher sell. And I think automakers are going to have to struggle to figure out how they pivot, how they make this work, because they know this is where we are going. It's just that transition period is so tough and it's expensive.
Jessica Caldwell, head of insights over at Edmunds. Thanks so much for taking the time here, Jessica. Really appreciate the insights and analysis over the overall car industry here right now. Appreciate it.
My pleasure. Thank you.